Good morning. Welcome to Stock Market Today. It's Wednesday, February 17th, 2021. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. That's upon further analysis. Always do further analysis, right? I can't stress that point enough. Hits your inbox every trading day before the market opens. U.S. equities were mixed to lower on Tuesday. Value outperformed growth as energy and financials were the best performing sectors. Defensives, healthcare, and technology underperformed the broader tape. Treasuries were weaker with the curve steepening. Big story in markets yesterday was not equities. Equities were boring coming back from the 3-day weekend. The big story is rates. All right, 30-year pushed above 2%, even more so. And the 10-year has kind of traded back towards 1.29 to 1.3%. Dollar was stronger on the yen and euro crosses. Gold remains under pressure. How long have we been talking about that one? Down 1.3%. WTI crude higher by 1%. Closed over $60 a barrel. For those of you who are longtime readers of my notes, you will notice that every one of my notes on a Monday has been talking about crude oil going to 60 since we broke through 40. We're there. So we get to the desk this morning. It's a little bit more of a mixed bag. S&P futures are flat after Asian markets were mixed overnight. South Korea, Japan, and Australia lagged. Taiwan, Hong Kong rallied. China remains closed for Lunar New Year holiday. European markets are lower. Treasuries are unchanged to firmer at the back end of the curve. Dollar is stronger versus the euro, but weaker against the yen. Gold down 70 basis points. WTI crude up 80 basis points. So for those of you who have been following along with my themes, they're broadly in place. And it was a mixed session yesterday. Let's get back. We'll shift back to the daily chart here. But nothing out there changes the trend. As a matter of fact, for IWM, we bumped up near-term support to 200 to 210, up from 190 to 200. Then, obviously the 160, 170. So you can see here, we kind of bumped this into a zone of support. The Qs, nice, steady uptrend. I think this thing's got 340 written all over it, but I've had that for a while. I also see 413 for the SPY. Okay, those are my kind of objectives. I don't do price targets. I just think in terms of probabilities and high probability outcomes. I think that's a high probability outcome, right? We get to those levels, we reevaluate. Maybe just keep going. I don't know. I say I don't know a lot because I don't. No guarantees here. I have no idea what's going to play out, but the trend is up. And the trend is up until proven otherwise. And, people who have been bearish, I've said this before, people who have been bearish have just been wrong. If they stay bearish, then they're dogmatic. And they have no risk process. We say trend and risk all the time, right? What's the trend? Up. Where are we within that trend? Well, right now we're overbought within those uptrends. If you read my note today, our overbought, oversold indicator, the one we talk about on our charts, for the major averages is overbought. So we're overbought within the context of an uptrend. Now, what does that mean? You should know what that means. I was talking about it 3 weeks ago. It means you lay back. You recalibrate your aggression levels. Overbought in an uptrend means let your winners run, do some work on new ideas such that if we get to an oversold position, you're ready. And then always make sure your risk management process is in place. The trend is up. The trend is up until proven otherwise. I can't pound the table enough on that. You have your roadmap. You have your levels. If you're, an intermediate term person from an investment standpoint, these are the ones that jump out at me. Our market in a minute, just as I said, what are we writing about today? Well, stocks are overbought in an uptrend. Again, fine. That's great. You want to see your stocks get overbought in an uptrend. That means they have some momentum behind them. At the same time, the sentiment picture is extremely mixed. I've never seen a more mixed bag. than I have from the sentiment standpoint right now. Financials break above the 2007 highs. That's fascinating. And the key driver of that, I think, is rising rates. And we'll talk about this. But we have to wonder, will rising rates derail the rally in equities? I have a view on this. We'll touch on it a little bit later on. Futures mixed to lower open here today. Taking a look at the major indices from a power bar perspective, take a look at the Dow, the only buck the trend. Yesterday was all about the reopening, reflation, whatever trade. Dow up 17 bips, 10 to 4 bulls to bears. S&P flat, let's call it flat. 159 to 45 bulls to bears there. NASDAQ down 27 bips, 28 to 8 bulls to bears. Small caps underperformed. 782 to 88 bulls to bears there. So, under 10 to 1 bulls to bears. So let's be concerned. Bonds hammered yesterday. Hammered. I mean, the trend in treasuries has been in place for a while. So nobody who's been following along with our work, or who's been following along with any kind of trend process, should be surprised that bonds got hammered yesterday. That's what happens in downtrends. Things get hammered. Well, that happened. Energy, your best performing sector, up 2.5%, 3-0 bulls to bears on that front. Stock of the day, just kind of an interesting setup here in MarineMax. Very bullish stock, outperforming the market with bullish money flow. Overbought, oversold indicator rounding out of an oversold position as the stock triggered one of our alerts, a money flow buy alert. Into yesterday's close. So MarineMax, part of the specialty retail group, which is strong. We're in a strong trend above a rising long-term trend line. If you are looking for ideas, again, thinking in terms of calibrating your aggression levels, these are the types of ideas that I'd be looking for, these kind of setups. Sector tracker, moving to the major sectors the last 5 days. Still good board. Energy and fins at the top, joined by comps and tech, materials, industrials, right? And then, I don't know. I've been saying the same thing for a few days now. But in an ideal world, we want all of this to be green. And this and pretty much this order, with the exception of discretionary. We'd like to see discretionary bump up, but we don't live in an ideal world and nothing's perfect. But look at the bottom 4 sectors. 3 of them, right, should be recognizable to you because every Tuesday, pretty much in our rotation work, our sector relative strength work, I point out that these defensive groups are lagging. Are you bearish the market while seeing these defensive groups lag? It's a data point that should make you question your view. Are you bullish the market? It's a data point that confirms your view. Pretty simple game. Just connect the dots. Industry in focus, oil and gas, EMP. Remember, yesterday we did services. Today we do EMP. Remember, over the in the past, we get these back to back. The algorithm spits them out for me to analyze, and it'd be a disaster, right? One disaster after the next in energy. Well, now it's the other way around. Past 6 months, outperforming the S&P by 18.25. Very strong power bar ratio. Pitching that shutout, 5-0 bulls to bears. Ranked number 7 of 21 sectors, subsectors rather, up 1 slot over the past week. ExxonMobil, PBF, and Ovintiv, OVV. I've never even looked at that name. All with bullish ratings, all holdings in a fund that is moving top side of the June high. One of the things that we've been looking for. Bullish, 5-0, strong trend. Outperforming, has been since December, right? And this is what allows us to not remain dogmatic. Rating turned neutral. Fund began to outperform. If I stayed bearish in that environment, in the face of that evidence, I would be dogmatic. And my views, I would argue, should be ignored. You don't paying attention to people who are dogmatic is a sure way to get you into a lot of trouble, I think. Not open-minded, no process. But this is the beauty of a quantitative model to help in an analysis process. There's no guessing here. Like, this happened. We went from massive underperformer to outperformer. Then the rating went bullish. So how do you stay bearish in that environment? No need to overcomplicate it. I know everybody's excited about clean tech. Well, I think the opportunity is here in the energy landscape. XOP, 52-week highs, folks. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. All about the reopening for the most part on the winner side of the board. Royal, Carnival, and Norwegian up 9.7%, 9%, and 7% respectively. Nothing company specific driving trading there. I think it's just, talking about stimulus. We're talking about vaccinations. Both of those things trending in the right direction. Economic data points, for the most part, moving in the right direction. So these reopening type trades gaining traction. Energy, 2.5% yesterday, right? We talked about it. We've been talking about it. So Marathon up 6.8% on the day. CBOE, didn't see anything company specific. I guess we can connect some dots there. Obviously, trading volumes have been massive over the past couple of months in and around equities and options. So makes a ton of sense to, see something like CBOE doing well. Loser side of the board, FTI, I'm not sure on this one. They spun off a company, probably and that's the only news I saw. They spun off a division. Maybe that's why as the stock prices readjust, we need to update those. ALLE, ELLE, down 7% on earnings. Enphase, kind of interesting, right? Enphase is solar, right? Converters. Down 6%. Well, the dirty stuff was up 6%. Kind of interesting. It's interesting to me that, President Trump was supposed to be great for the traditional energy, fossil fuel groups, and they were a disaster while he was president, right? And in the meantime, we've seen clean tech ramp, and now President Biden's in office, right? Who presumably is great for clean tech, and there probably is, but now we're seeing traditional energy turn. Markets are fascinating. It's one of the greatest things I've ever seen. It's why I love doing this every day, because nothing you think is sacred. And the market is going to do what it can to hurt the greatest number of people, especially, if you're just kind of a first level thinker. It's going to hurt you. NRG down 5%, likely a function of Texas blackouts. Nothing company specific driving PAYC down 5.5%. Sentiment, mixed bag. And I talk about this in my note today. I show you two data points here. Obviously, this one just boggles my mind, but it is what it is. I don't get to decide what is. I just get to react to it. And, excess greed in the options market remains a thing. Now, everybody kind of got a little excited last Friday when the VIX looked like it was going to trade below 20 and did actually trade below 20 for the first time since the pandemic. But we quickly snapped back above the 20 level. So within my note, here are the sentiment gauges that I'm looking at. And this is exactly what I'm writing. Over the course of the past week, sentiment has begun to send mixed signals. While options traders remain dogmatically bullish, the VIX continues to hold 20. All right, so we know that. The CNN Fear Greed Index has become more greedy, shifted. It's over 20. It's over 70 now. While speculative positioning in S&P 500 futures products has shifted to net short, right? So it's just this mixed bag. I'm going to highlight it because I'm watching it. I think it's important to pay attention week in, week out. But simple fact of the matter is it's very much a mixed bag. So we'll just defer to price as we always do. Financials take out the highs, XLF. Just a great looking chart here. Sideways consolidation, and we're taking out the highs. That's playing out as rates have backed up. So the 10-year yield above the 50-day, above the 200-day, both rising. RSI shift. The shift has taken place. We're now in bullish ranges and getting overbought. This is on yields. But what's interesting to me is it's a steady grind. And I think in a steady grind higher, the market can absorb that. I think if we woke up and rates went from 1.3 to 2, market would not like that. Equity market would not like that one bit, especially growth stocks. But what looks to me is it just kind of looks like we're getting back to the pre-COVID trend. And we know the Fed has our back. So this will be interesting to watch. That'll wrap us up. Take us for a test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.